Ever wondered what fintech is? Well, let's dive right into it. Fintech, a term coined from the words financial technology, is transforming the way we handle our money. It's a revolutionary concept that merges the financial sector with technology to enhance and automate financial services. Think of it like this. Do you remember the last time you physically went to a bank? Probably not. That's because fintech has made it possible for you to do all your banking right from your smartphone. You can transfer funds, pay bills, or even invest in stocks without stepping foot in a bank. But that's just the tip of the iceberg. Fintech goes beyond banking. It's also shaping insurance, investment management, and crowdfunding platforms, to name a few. And all this is just the beginning. Now that we know what fintech is, where did it all start? Stick around as we take a journey through the fascinating history of fintech. The term fintech came into existence in the 21st century. However, its roots can be traced back to the introduction of the credit card in the 1950s. Now let's take a moment to appreciate this. Imagine a world where every transaction required physical cash. The introduction of credit cards was a game changer. It was the first large-scale instance of money being handled in a digital, abstract form. Following this, the 60s and 70s were marked by another significant development in the realm of finance: the automated teller machines, or as we commonly know them, ATMs. These machines allowed people to access their money round the clock without the need for a human teller. This was revolutionary, and it marked the beginning of automation in financial services. As we moved into the 80s, electronic trading emerged on the scene. Prior to this, stock trading was conducted in trading pits through hand signals and shouted instructions. Electronic trading systems, however, allowed for faster, more efficient, and transparent transactions. They eliminated the need for physical trading floors and made the stock market accessible to a wider audience. Then came the 90s, and with it, the rise of internet banking. This was a direct result of the internet revolution, and it changed the way we banked forever. Customers could now perform a variety of banking tasks from the comfort of their homes. It was convenient, it was efficient, and it was secure. All these developments, from the introduction of credit cards to the rise of internet banking, signaled the birth of fintech. They marked the beginning of a transition from traditional physical financial instruments to more abstract digital ones. They paved the way for the rapid growth and development of fintech that we see today. So we've seen the birth of fintech, but how did it evolve over time? The financial crisis of 2008 played a significant role in the evolution of fintech. This period of economic turmoil saw the collapse of major financial institutions, the depletion of savings, and a substantial loss of trust in the traditional banking system. But as the saying goes, necessity is the mother of invention, and this crisis indeed birthed a new era of financial technology. The 2008 financial crisis prompted a re-evaluation of conventional banking practices. People started to question the inefficiencies, the lack of transparency, and the exorbitant fees associated with traditional banking. This skepticism sowed the seeds for a new wave of innovation in the financial sector, which we now know as fintech. Fintech, or financial technology, began to gain traction as a viable alternative to traditional banking. Startups sprouted up, offering innovative solutions driven by technology. They focused on streamlining financial processes, enhancing security, and most importantly, improving customer experience. The goal was clear: to democratize finance and make it more accessible to everyone. The impact of the 2008 crisis was also felt on a regulatory level. Governments worldwide started to realize that they needed to foster innovation in the financial sector to prevent a similar crisis in the future. This need led to the creation of regulatory sandboxes, where fintech startups could test their innovations in a controlled environment without the usual regulatory constraints. As these startups began to flourish, they started disrupting traditional banking models. Peer-to-peer lending platforms began to emerge, bypassing banks and connecting borrowers directly with lenders. Digital wallets and mobile payment apps started to replace physical cash, making transactions quicker and more convenient. This period also saw the rise of robo-advisors, automated investment platforms that use algorithms to manage and optimize clients' portfolios. These platforms offered a more accessible and affordable alternative to traditional financial advisors, democratizing access to investment advice. The financial crisis of 2008 acted as a catalyst, triggering a wave of innovation in the financial sector. It led to the emergence of new business models driven by technology that aim to make finance more accessible, efficient, and transparent. But what does the fintech landscape look like today? Today, fintech has permeated every aspect of our lives. It's as omnipresent as the air we breathe, influencing our daily financial interactions in ways we might not even realize. The modern fintech landscape is a vibrant tapestry of innovation, woven with threads of mobile banking, cryptocurrency, and robo-advisors. Let's start with mobile banking. It's hard to imagine a time when we had to physically visit a bank to check our balance or transfer money. Today, banks are literally in our pockets. Mobile banking apps allow us to manage our finances with just a few taps on our smartphones. We can pay bills, transfer money, and even deposit checks from the comfort of our homes or while on the go. Then, there's the world of cryptocurrency. Bitcoin, Ethereum, and countless others have been making headlines, and for good reason. These digital assets are reshaping our understanding of money. Cryptocurrencies offer a decentralized way to store and transfer value, free from the traditional constraints of banks and governments. They've opened up new avenues for investment and speculation, and their underlying blockchain technology has the potential to transform industries far beyond finance. And let's not forget robo-advisors. These automated investment platforms use algorithms to manage your portfolio, taking the guesswork out of investing. Robo-advisors can assess your risk tolerance, investment goals, and time horizon to create a diversified portfolio tailored to your needs. They're democratizing investment, making it accessible to anyone with an internet connection and some spare change. These technologies are changing the way we handle money, making financial services more accessible, efficient, and secure. We can now manage our finances with a level of convenience and control that would have been unimaginable just a few decades ago. Fintech has come a long way, but what does the future hold? As we stand on the precipice of this brave new world of finance, we can't help but wonder what other innovations lie on the horizon. But that's a story for another scene. The future of fintech is exciting and full of potential. As we peer into the crystal ball of the future, we see a landscape brimming with innovation and potential. One of the key components that will shape the future of fintech is artificial intelligence, or AI. AI has the ability to analyze large amounts of data quickly and accurately. This means that financial institutions can use AI to make more precise predictions, reduce risk, and improve decision-making. Machine learning, a subset of AI, is also set to revolutionize the industry. Machine learning algorithms learn from data, improving their predictions or decisions over time without being explicitly programmed to do so. This technology can be used to detect fraud, predict market trends, and even provide personalized financial advice. But the future of fintech isn't just about AI and machine learning. It's also about decentralization. We're moving away from a world where financial institutions hold all the power, to one where individuals have more control over their financial lives. This is where decentralized finance, or DeFi, comes in. DeFi is a blockchain-based form of finance that does not rely on central financial intermediaries such as banks or brokerages to offer traditional financial instruments. Instead, it utilizes smart contracts on blockchains, most commonly on Ethereum. DeFi platforms allow people to lend or borrow funds from others, speculate on price movements on a range of assets using derivatives, trade cryptocurrencies, insure against risks, and earn interest in savings-like accounts. As we move forward, we can expect to see more integration of these technologies into our daily lives. Imagine a world where your financial advisor is an AI, where you can lend and borrow money without a bank, and where your investments are managed by smart contracts. This is the future of fintech. The possibilities are endless, and the potential is enormous. But like all technology, it's not without its challenges. We need to ensure that these technologies are used responsibly, that they're accessible to everyone, and that they're designed with the security and privacy of users in mind. The future of fintech is bright, and we can't wait to see what's next. So, we've taken a journey through the world of fintech, from its birth to its future. We've explored how it emerged from the ashes of the financial crisis, as innovative minds sought to harness the power of technology to revolutionize the financial industry. We've seen how it has evolved, transforming from a niche sector into a global force, reshaping everything from banking to investments. We've delved into the modern landscape of fintech, a world of mobile banking, crowdfunding platforms, and digital currencies. And we've looked ahead to what the future might hold, with artificial intelligence, blockchain, and other emerging technologies set to push the boundaries even further. But at its core, fintech is about more than just technology. It's about reimagining the way we manage, spend, and invest our money. It's about making financial services more accessible, efficient, and democratic. And that's a journey that's only just beginning. Remember, fintech is not just about technology, but about rethinking and reshaping the way we handle money.